What's good, everybody? Spektrades back here. In this video, I'll be going over exactly on how to execute smart money ICT concepts from top to bottom and go over a full pre-market routine on how we caught a snapper trade that we went from the 4-hour time frames to all the way the 15 seconds time frames. And I'll be showing you exactly on how we can go from the higher time frames to the lower time frames and catch those sniper entries. If you guys are new here, my name is Wendell, also known as Spektrades. Make sure to follow me on Instagram at Spektrades and DM me if you need any help. Without further ado, let's get straight into this video.
Here is our full top-down analysis from the 4-hour, the 1-hour, the 15 minutes, the 5 minutes, the 1 minute, and all the way to the 15 seconds, where I will be going over on exactly how we went from the higher time frames to the lower time frames and to execute these smart money ICT concepts. Now let's go over on our journal into exactly how our pre-market outlook went and how the trade went. As you guys can see right here, we are now on the Spark Trading journal. This is the pre-market routine section, and as you can see, this was September. This trade was taken on Thursday, September 12th. I'm just gonna click this right here, and then for Thursday, September 12th, as you can see, for the first question we asked is what high/medium impact news drivers should we be aware of? And for today, we had 8:30 a.m. and we have PPI and unemployment claims. So this was a clear, heavy, high impact news day right here at 8:30 a.m. And all of this right here is our next questions, where we asked was the draw on liquidity that we look for, where we develop our daily bias. Also, all of these questions are truly needed every single morning before we hop on the charts and start taking trades, because you have a solid bias, a solid understanding of what you are going to look for when you are looking for trades. You are not just going in there blindly taking trades. You're going with a solid bias and a solid structure. And then right here, we put our before screenshots. So like before we take any trades, we take screenshots. So this was me right here on the Zoom call with the team right here. As you guys can see, I was just explaining exactly what we're going to be looking for when we are taking our trades. So this is the before screenshot. And then this is the after screenshots right here with the team. This is when exactly when we entered our trade. Boom, stop loss below these old lows right here. This was just a snapper trade, and then price just started scaling higher firmly until we reach our old high right here, our take profit.
Access to the same trade journal that I use with all the features, including a full day trade routine, full trade journal with tracking metrics like R multiple and win rate, a full backtesting guide, psychology, additional ICT education taught nowhere else, and a full guide to creating and developing your own trade model. Guys, this is the complete trade journal that you need. Stop paying a monthly fee for your trade journals. Use the Spark Trade Journal to help build progress and become more profitable. Click the link in the description and get your copy.
The first thing we have to understand is our higher time frames. What is the higher time frame trying to show us? As you guys can see, this is the higher time frames. The higher time frame is to identify the overall trend of direction and to develop a firm daily bias. So our higher time frames, because we're day traders, is usually from the 4-hour time frames, the 1-hour, and then the 15 minutes time frames. So as you can see, we're just gonna zoom in. Now we're zoom in on this schematic right here. As you guys can see, we are now on NAS 100 on the 4-hour time frames. As you can see, this was our Asian lows right here. Then you see that price cleared our Asian lows during the New York kill zone time, and then tap inside of a lower time frame zone to then go higher. This is what we call our continuation pattern right here, where we go from internal range to now pushing higher to now go to external range. So we go from internal range to now go to external range. This is what we call our continuation pattern. So this right here is our 4-hour bias. Price went lower to clear these old lows right here. So now after price tap inside of this lower time frame zone, we can now expect for price now to come in higher to go and clear these old highs. Now let's go to the 1-hour. And now on the 1-hour, it can show us way more context than the 4-hour. As you can see, price went lower here to clear these Asian lows right here. Perfect. These Asian lows were swept. And now on the lower time frames, as you can see, price wicked lower and fails, right? Fails to give us a firm body break. This is what we're looking for right here. We're looking for a liquidity sweep, not a liquidity run. If price right here gave us a break of structure of this old low right here, price then would have came back, give us a pullback to continue this bearish momentum. But price went lower and gave us a liquidity sweep of these old lows right here. And then it started pushing higher to go and clear these old highs. So this is a liquidity sweep. Just like I stated, right, this is our continuation. Price is going from internal range to then go to external range liquidity. So price is attacking internal range liquidity, these old lows, to then go to external range liquidity, these old highs right here. and we catch our trades as soon as price is breaking out perfectly right here. Now let's go to the 15 minutes time frames. Now on the 15 minutes time frames, as you can see, we are now on the New York kill zone between 8 a.m. to 12 p.m. Eastern Standard Time. That's for everybody that don't know the times for the New York kill zone. It's from 8 a.m. to 12 p.m. Eastern Standard Time. So wherever you are at in your country, position your time to this exact time right here. This is when the algorithm moves very nicely. As you can see right here, this is our Asian lows, just like we've been stating, and then price went lower and cleared all the liquidity below these Asian lows and tapped into our 15-minute order block, right? Just like I was stating, this was a lower time frame zone. This was our 15-minute order block cleanly, and we had a fair value gap right above it. As you know, the fair value gaps is the magnet of the market. So price attracted to this fair value gap right here, filled it in, tap inside of our 15-minute order block, perfect, to then go where? Attack old highs. When sell side liquidity has been taken, we cannot expect for buy side right here. Perfect. And now for our, and this is where a lot of people mess up and it gets tricky. As you guys can see right here, for the 5 minutes time frame, this is the first time frame I go down to when I'm looking for a entry. As you can see on the 5 minute time frames, the first thing we have to do is to identify the higher time frame trend by using the 4-hour and the 15-minute charts. So if you haven't already, make sure you watch my top down analysis lesson for more guidance on how to go from the 4-hour to the 15-minute time frames and do a proper top down analysis. I have multiple lessons on my channel. And the next thing is that once we have confirmed it, then we can scale down to the lower time frames, such as the 5 minutes chart, to then start looking for entries. And then for that, we can develop a precise lower time frame entry for our strategy for optimal execution right here. So we don't go to the 5 minute time frames until, right, we do a proper top down analysis of the higher time frames. Right, that's why this comes first, right? We have to do a proper outlook of the higher time frames, and then after we know exactly what price is trying to pull towards to from the higher time frames, that's when we scale down to the lower time frames to start looking for our entry. As you guys can see right here, this trade right here, I'm just gonna go over it on the 5 minutes charts right now. Perfect. This was the trade right here. So price went lower and gave a liquidity sweep of these old lows. Perfect. And then price went higher and give a break of structure, a market structure shift, right? We can label it a market structure shift of this old high right here, MSS. Perfect. But right on this rally right here, as you guys can see, after price came back lower on the lower time frames, once we scaled down even lower, price, the momentum was so strong here, we just entered our trade from here, stop loss at these old lows right here, right? You can put it at these old lows here or here. All of it is perfectly fine, because once the algorithm kicks in and price start pushing higher, it will not fail you. It will not go down lower to take you out. This has become a strong low at this point. This is what we call a strong low. All of this right here are strong lows. It took liquidity from this old low and went higher and gave it a market structure shift of an old high. Now let's get down to the 15 seconds to see even more price action. After developing a 5-minute entry approach, we then scale down further to the 1-minute charts to look for strong lower time frame structural breaks to potentially catch a trade for continuations in our desired direction. Beginners and intermediate traders should only focus on the 1-minute to 3-minute and 5-minute. These are the strongest lower time frames for precise entries. Now for the 15 second time frames is for advanced risk taking traders who have mastered these concepts. I truly don't advise no beginners or no intermediate term traders to go on the 15 seconds. The 15 seconds is truly too volatile. You will truly be gambling on the 15 seconds because it's truly fast, and a lot of the times the structure do not hold. So the 15 seconds is for advanced risk taking traders who have mastered these concepts. While it reveals a lot of structure, it is not as powerful as the 1 minute, making it extremely fast and volatile. So this is the 15-second chart. As you can see right here, after price cleared these old lows right here, this is a 15-second market structure shift. Price went lower right here, and then this low came and gave a liquidity sweep of this old low. Once price gave us a break of structure of this old high right here on the 15 seconds, all I did was just place my entry, perfect, stop loss at these old lows, market execution our trade right here, and we're targeting buy side liquidity, old high. On the 15 seconds, the structure appears beautiful. It's just on the lower time frames, you have to have a higher time frame bias. The only reason we caught this trade perfectly on the 15 seconds was that we knew that on the 15 minutes in the 4 hour, we had this old high right here, right? This is the old high that was our draw on liquidity. And then we understood that once Sell side liquidity was taken, buy side liquidity was next. So we knew that price was gonna pull toward this old high. So after price swept these old lows right here, all we did was just position ourselves on the lower time frames. We just positioned ourselves on the lower time frames. As you can see, price came lower, mitigate this breaker right here. We got our trade, and then we're targeting the old highs right here perfectly. This trade right here was taken on September 12th. So make sure you guys go back on your charts and go over this video once again, and go on your chart and mark it exactly as you've seen.
I hope this video brought you a lot of value. If you guys need any help, make sure you guys check out the links in the description. This is it. Make sure to comment, like, and subscribe. Spektrades out.